And welcome to episode number 44, if I'm not mistaken, of Daily Market Mastery with me, popular investor Christian Rauchenwald. As always, in Daily Market Mastery, we are using the Elliott Wave Theory or Elliott Wave Principle to try to forecast market movements, and I'm giving you an insight into how I manage my portfolio. Now, can already take that away. We're going to focus today probably on the NASDAQ and maybe NVIDIA, depending if we have enough time. Also, sorry for being a minute late or 2 minutes late to the stream. I was already starting to label something and got lost, or lost track of time. Anyway, before we get started, the last thing to mention as usual is first of all, you can always check out my track record by following the link that you see right now on the screen, or also in the pin chat message and the description below the live stream / video, depending if you're watching it right now or as a recording later. And additionally, as always, the usual disclaimer applies that everything that I share in this live stream / video, depending if you're watching it right now or later as a recording, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. By that I mean I'm just showing you what I'm doing, and why I'm doing it, or why I think it's the right play. That doesn't mean that it's the right play. Nobody's right 100% of the time. Just because something seems right to me doesn't mean that it's a good fit or a good decision for you. And you should obviously, again, do your own research and make your own decisions. Do not blindly just execute trades and risk your money just because you heard me say something on a stream or in a video. Again, because I might be wrong, or I might just also have information or consider information that I didn't manage to put into the video. Either way, you're responsible for your own finances. Don't blame me if something goes south. If you want to, as said, you can also just copy my portfolio on eToro. In this case, you don't have to worry, you don't have to worry. There's still the risk of losing. Anyway, let's jump into the stream. So I'm going to switch to here. By the way, usual reminder, every tool that I'm using, everything else that I'm using in this live stream is also linked in the description down below. So a link to the Elliott Wave Theory book that you can read online for free, the softwares I'm using, and so on. Now, let's get started here. Yeah, so we've had obviously a rough year so far with minus 27.29 after having 3 incredible years. And if we look at this, this year started really, really bad. August is the first month, a month later than what I expected in recent episodes. So July still ended up red. August is the first month where we're on track to have a profitable month. We'll look into that, what I expect for the rest of the month, if I believe that 4% will grow, or if we will lose a little bit towards the rest of the month. And our portfolio right now consists of investments against the market in several indices. We have an investment in Icon Enterprises, Alibaba, Disney. Disney's earnings were horrible. They are already mentioned. It's possible that position might not work out for us. Again, nobody gets it right 100% of the time. Our stop loss there is not that bad. So we have I'm gonna check on the other side real quick. 1 second. We have Disney, where's Disney? There's Disney. We have on our position, and our position is only 1% of our portfolio, we have 13.4% risk, whereas our take profit would be 184%. So right now it looks like we're going to take a loss here, but again, we're going to stick with our analysis. So either we're going to basically lose 13.4% of that 1%, so 0.14% roughly, or if we're right, we're gonna make 184.84% of that 1%, which would then translate to basically a 2% overall profit. So the risk-reward ratio is really, really good here. As I said, don't get scared by those minus percentages here, because they are mostly because I took profits here throughout the year from time to time. And basically our bets against the markets are still profitable. Just the individual positions that we still have open are currently at a loss. Now, if we jump into Motive Wave and we look, let's take a quick overview. So we don't need the VIX anymore. So close this, and then we switch here to a 2-day chart. 2-day. So we already said that's roughly where I started shorting the markets. That's our last year's performance. That's what we suffered this year so far. Well, and now we are in the beginning of wave 3 finally, which means the top here is supposedly in my opinion, which means we're going to go down here. That doesn't mean that in between we will not go a little bit up, but it means that in my opinion we will not go higher than 4,607.07 in the SPX. And even that point we shouldn't reach at all, to be honest. So, but like in that direction, yes, but not above that, which means this is also the reason why our bets against the market are still profitable, because again, we started shorting here and at no point did the market go higher than this again. Yeah. So far so good. Now, so in the SPX, if we zoom in a little bit, so let's go with an hourly chart. So basically we'll have to wait and see how this plays out, but on first glance I would say adjust the waves. So on first glance I would say this here is 1, 2. And if this here is wave 1, 2 of the impulse wave going down, so with 1 and 2 being here with a parallel through point 1, then it means we're currently waiting for a breakout to the bottom to confirm that we're in wave 3. Yeah, so using the Kennedy channeling technique. Technically, we could already be in wave 3, but if we follow just Kennedy's channeling technique, which is an easy way to label waves, then we're not yet in wave 3 because we don't have a confirmed breakout. We keep bouncing from that channel. Yeah. If we're here in wave 3, then we also basically on a smaller scale here probably we are already. So if we go further on a 15-minute chart, then if this here were 1, 2, then we have to have another 1, 2 here where we definitely have a breakout of the channel. Can actually do that exercise real quick. So Kennedy channeling technique. So again, just as a summary, so my assumption is that this here is point 1, 2 and with wave 3 somewhere in progress, yeah? And which means then this third wave here also has to subdivide into a 1, 2, where logically it would look like, obviously the starting point is here. Wave 1 would be, what's the low here? 4, 5, 6, 7, 6, 6. 4, 5, 6, 7, 5, 3. So wave 1 would be this point here, and that would give us our base channel using Kennedy channeling technique, and that's really, really super cool right now, because once we have a breakout from that base channel, we are usually in wave 3, so that would be confirmation that we're in wave 3 downwards here on that smaller degree, and to find the end of that wave 3, we take our point 2, which was this one here, we take our point, now I'm moving something that I didn't want to move. So we take our point 1. Point 1 was this one. Point 2, sorry, I have to move it like this. Yeah, point 2 is this one. And point 3, potential point 3. So it looks like this. And when we extend this, the moment we have a breakout here indicates that we are in the fourth wave, which means we would have here 1, 2, 3, and now we're in the fourth wave. The end of the fourth wave using Kennedy channeling technique, we just need a trend line. So we put that here and take the next basically high point here, extend it. And here we basically are, according to Kennedy channeling technique, in wave 5. Yeah. And what's interesting here, again, Kennedy channeling technique is not like the holy grail here. It's just like an easy tool to give you an idea where we are. What's interesting here is like very often we would in a fourth wave touch the top or the median of that base channel. Now here we don't touch the top, but we do so later, which means that this here, but we also get a new high here. So while this here might be 1, 2, 3, 4, and then let's check Kennedy channeling technique if we would have a potential wave 5, because to get our target for wave 5, we take our point 2, which was here. We take our potential point 4, a parallel through point 3, and then our profit target when we extend it is the top or somewhere in that area of the channel. So potentially what we could be looking at here, I'm not sure if auto labeling will get it like this, is, yeah, not like that, but would be this here. So 1, 2, 3, 4, and now wave 5 finished here. That would, however, then require that we have a corrective wave here, and that corrective wave here would need to be a combination, because very often the corrective wave would take us into the area of wave 4 of the previous degree, which only happens later here, yeah, which gives us two potential cases here. I mean, it's clearly, or it's not clearly, but it looks decent enough like an ABC pattern here. so that is indeed a finished wave 4. We would need to look even closer, so on a lower time frame, to see if in here we actually can fit an entire 1, 2, 3, 4, 5 impulse, but I think that's the case, to see if that already is the finished wave 5. The other option would be that we actually haven't finished. Now that wave 4 has to be done because we get a new low here. The other option would be that wave 3, 1, 2, 3, and that this actually is not yet wave 3, but at this point here is wave 3, but it wouldn't make sense then, because then we would have to fit another 1, 2, 3, 4, 5 in here. Okay. And yeah, so we're going to have to assume, or I'm going to assume for now, that this here is our corrective pattern, or a combination of a corrective pattern. Would need to be either, as I said, a combination or some flat corrective pattern to get us a new low here, because we went slightly lower, which would mean that we're here. So that was wave 3, 4, and then that would not yet be the big wave 3 that we're waiting for, because that big wave 3 doesn't have the breakout yet. But that would then just make this entire thing here. So 1, 2 with that wave 3 in progress. Which means here we would actually right now, so in the SPX I would actually, and it aligns with the NDX then as well, I would right now actually expect that this down here is again wave 1, so again of an even smaller degree, and we are now expecting to see a wave 2, and a wave 2 would obviously correct very often till the area of wave 4, which potentially is here, of the previous degree, or into the area of 38.2 to 61.8 retracement. So, and we see we touched the 38.2. So potentially there is the chance that that retracement here is already done. So that's already 1, 2. But considering how long this wave took to develop, I doubt that wave 2 is finished here. So I believe, again, not 100% certain here, because we didn't bother to confirm it even further on lower time frames. And the lower the time frame, we're already looking at a 15-minute time frame. So one candle reflects 15 minutes of movement on the chart. The harder it gets to accurately spot the patterns, at least for me. But looking at what we have here, I would believe that basically we have to have more upwards movement here. So on the 15-minute chart today, it would not surprise me if we actually, especially since the last week was very, very bearish in our favor, that this week starts with some bullish movements here and starts potentially, you can see that this point here, the high that we have here, aligns almost perfectly with the 61.8 retracement. So I would expect that in the SPX that we see a rise to around 4,500, potentially a little bit more. So we see, I mean, we're talking not about very big movements here, because we are already looking on a 15-minute time frame, but that we go to 4,500 to complete some kind of corrective pattern before we then go further down. That's about the SPX, and it took already too much time. So we're gonna quickly jump here, the Dow Jones, and we're just gonna look at the overview. So we have the same situation as in the SPX, that we have our high here. We didn't short the Dow Jones for some time. We only shorted the NASDAQ and the SPX. We unfortunately entered somewhere in this area here, assuming that this is already 1, 2 and will go down. Turned out to be wrong, because this is a combinative corrective pattern, which should now have topped out here, which means we are now going to, in my opinion, see the 1, 2, 3, 4, 5 that eventually takes us down further. And this third wave, again, it's not going to happen in a month, but over the next couple of months, this third wave has to take us below 28,660. So it has to take us below and build a new low down somewhere here-ish. To give you an idea where I think we are going, we can use a Fibonacci extension here and get some potential profit targets. And if we do that, the first profit target would be at 26,000 exactly. And then the next one would be at 24,500. And then the next one, I'm going to have to update that real quick, or actually go into the settings. No, it's not workspaces, it's preferences. 1 second. Do we have that here? Fibonacci's, blah, 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 chart, toolbar, sound, Elliott Wave, harmonic, historical data. Nope, there is nothing, and there is nothing. Then And if here, what is missing is the 238.2 retracement, and we actually don't need those for Elliott Wave price targets. We just need the 50 we need, 61. So I think, do we have templates here? No, we don't have a template. Save as template and call that Elliott Wave. Yeah, so save as. So we have 38.2, 50, 61, 138, 238, okay, and then we have the 261. So now you see the potential profit targets for where we are supposed to go during the next couple of months, which means not only would we recover everything that we lost, although in the Dow Jones we only entered here, so we only have to get down to the 61.8 retracement to be in a break-even or profitable scenario, and then from there moving forward we actually stand to make profit. Now there's still a little bit of time till the end of the year, so we should be able to recover the losses that we incurred, or pending losses, yeah, because we didn't close the position, so they're just pending. Question is how much into a profit we can get by the end of the year. Yeah, if we look at the Russell 2000, there we have the same situation. So we see that it looks like we have a flat corrective pattern here that builds a new low, and that makes that 0.2, which then looks like, or would look like, this here would be another 1, 2. Now here there is still the chance, we're going to have to check real quick with a horizontal line. That one here is at 2007.31, and that one here is 2003. Yeah, so it almost invalidated the pattern a little bit by almost reaching that point. Technically, this here should be 1, 2, and we can clearly see an ABC, so a 3-wave movement, where we can also clearly see a 1, 2, 3, 4, 5, so a 5-wave movement down here. As a result, so this here would then be at 1, 2, with now wave 3 in progress. Now it's possible that wave 2 didn't finish here, but that this here turns into a combinative corrective pattern. Yeah, especially because we cannot clearly divide this here. I mean, while that here might subdivide into a 1, 2, 3, 4, 5, assuming that this wave here is not shorter than this wave. Yeah. It's not a clear A, B, C, or 1, 2, 3, so a 3-wave pattern up here. So it's possible that wave 2 officially doesn't end here, but that the actual end will be on a different point, not higher, but on a different point in general, and that whole thing here therefore then turns into a combinative pattern that is then like X, Y, Z, for example. Yeah, in which case then that 0.2 will move. Either way, we are good and fine as long as we do not go higher than the 2030 that we had here. If we would go higher than that, then we'll have a problem and have to reevaluate, but I don't think that's going to happen. And with that, we can jump into the NASDAQ. We're going to zoom out here. It might look a little confusing on the 2-hour chart, but let's give it a try. Yeah, it looks a little confusing here on the chart. So we're just gonna, 2-day chart might hide a few things. Let's give it a try. 2-day chart, no, doesn't hide enough. But on a 2-day chart, we see the same pattern. So we have the time since I started shorting the market, the year of profit, now the counter trend, now here where we basically, here and here where we believed, okay, now ABC, 3-wave pattern finished, we go down again. Okay, ABC, 3-wave pattern finished, we go down again, just to watch it turn into a corrective combination. Now the benefit is there's not much room anymore to the all-time high, but it looks like also finally the top is in and we are actually heading down. Now, if we look at the recent high that we saw here, we can clearly identify a 1, 2, 3, 4, 5 wave pattern here, which makes up this wave 1. And then not so clear, but still an ABC corrective pattern making up that wave 2. And then also a little bit trickier, but also partially or partially reasonably easy to spot a 1, 2, 3, 4, 5 pattern that took us down here last week mostly. And yeah, then we have here our that's 1, 2, 5, which means, and that's the retracement. So template, manage template. Okay, for impulse, I don't have that set up yet. Okay, so let's, it's for the wave, sorry. Defaults, manage templates, Elliott Wave. I don't want to rename it, I want to use it. How do I load a template? I can select it here. Yeah, stupid me. And actually then defaults, and I don't want to save that as default, so I have the other levels still backup. Yeah. So in terms of profit targets here, we look at 14,688. However, the important part here is I'm going to get rid of that extension real quick, and we're going to also update the retracements and get rid of all the levels that we usually don't use. Everything above 100 we don't need with a retracement because we don't have that case. So we need the 50, 31, yeah, those three. Save as Elliott Wave retracement. And then that was extension, rename. Extension. Yeah. So okay, close, and then here we need the retracement. Yeah. So, but not from here, but from here. So if that is our wave 5, we would expect a retracement into the 38.2, 50, or the 100%. That one's missing. Sorry. 100 obviously still needed. Template, save as template, retracement, save as, yes, override. Okay. So we would expect the retracement into the area of wave 4 of the previous impulse wave of a lower degree. And we can see that that previous impulse wave almost perfectly aligns with our 61.8 retracement at, in this case, around 15,400. Now, however, I have a second count here, and I want to show you another tool that we use from time to time, and that would be wave basis. So I'm just going to drag it over here. Actually, one second. I'm first going to make sure that I get it into the same window. There we go. And then not this, but wave basis goes over here. And here we're also looking at the NDX, and wave basis is cool because you can use the link in the description below to sign up, and then you don't have to subscribe. If you see, I'm also not subscribed to the paid features, which means some things are not available after your trial, but other things are still there, which is really cool. Now, if we look here, as you notice, wave basis has the functionality to show you the price targets of where things where waves should end. Yeah. Now that is not based on future candles, but that's based on where you put your waves. Yeah. So if I move this wave 4 here because I say it will go till here, then you don't see the forecast anymore because it would be ridiculously low. Yeah. And so basically, depending on how I move those waves, if I say wave 1, although completely wrong, but if I say wave 1 ended here, then you can see how it adjusts and affects all the future predictions. Yeah. Now, if we look here, we see wave 1. The moment I identify this as wave 1, it tells me, hey, we're now going to have a wave, or if this is indeed the end of wave 1, wave 2 will correct till up here. Now, it goes a little higher, but it still gives you a great idea of where you can start entering your next short position. Yeah. Now, it's not always right because, for example, and here we have a 1, 2, and we see that for wave 1, it still gets it roughly correctly. Okay, we get into that area, but we also go a little bit further. Yeah. And then, however, if we look at this wave 2 here, it tells us precisely, okay, the moment we would have identified this as a finished wave 2, that's the important part. So we need to be able to identify this as A, B, C, or another corrective pattern. It tells us precisely, okay, now you can short it again, and we will go down most likely into that area. And we did exactly go into that area. Then we see, okay, we turn around here, and it tells us, okay, now wave 4 will take us into that area. And we precisely, roughly in the center of that area, turn around. And then again, for wave 5, it gets it slightly wrong. It predicts it to be down here, when in fact it turned out to be further down. Yeah. Now here on that smaller degree, now we see it didn't get it that often right. So for wave 2, it got it perfectly again. For wave 3, almost perfect. We didn't get all the way. For wave 4, it missed. Yeah, so wave 4 went quite substantially further than what was to be expected. And for wave 5, it also partially missed. We went a little bit lower. Yeah, but overall, you can see that those forecasts are relatively accurate. I mean, you don't have to get it right 50% of the time, because if you're able to enter a position here, like a long position, and you have your take profit here, your risk reward ratio is still good enough. Or you can then say, once we get into that area, I'm going to add a trailing stop loss. So as the market moves up, my stop loss moves with it. And when we then have the downturn, I don't risk losing everything. Yeah. So, but your risk reward ratio usually is going to be very, very good, which means usually you're going to end up, what's actually the lower point here? That one second, 15 to 70 to 70. Yeah. So you're going to end up with a profit on average, even if you are right only like 30% of the time. Yeah. Or long term on average, you will have a profit. Yeah. So, but the important part is here also we can on multiple levels. So we have our big pattern here in the NDX that says, okay, we have wave 1, 2, and now potentially this wave 3 finished. Yeah. And which means we are now, and we are right now in that area here. We had a negative week, pretty much the entire week. And we're expecting now to have some upwards movement, which would be wave 4, where again, we're saying, okay, we expect it to correct towards the wave 4 of the previous wave, which would be here, the 4,360 mark. Now let's double check. Maybe I have the wrong one here. 4,360 is high would actually be this one, yeah, 360. Yeah, so the previous impulse wave of a lower degree here is labeled differently. So the auto labeling here is suggesting that actually, oh no, yeah, my mistake here. So because in motive wave we labeled the orange wave, but we didn't label in motive wave that smaller one here. Yeah. Which means technically the previous impulse wave would actually be the one at 15,500. So that's where, like, rule of thumb in quotes, we should correct towards 2, and where we would have the perfect 61.8 retracement point as well. Yeah. However, using the prediction features or forecasting features of wave basis, it tells us, okay, it will be the area of this wave 4, and that would be, if we check Fibonacci retracement, so that would be slightly below or between the 38.2 and the 50% retracement, which would also be an okay retracement for a second wave. Yeah. So, which gives us basically 2 entry points. So we have wave basis, which based on my analysis tells us, okay, that's how far we might go. And then we have motive wave that tells us we're going till here. Now that looks like a big difference on the chart because we're looking on here on an hourly time frame and on motive wave on a 15-minute time frame, but it actually is basically between 15,250 and 15,500. So we're talking about 250 points range. And obviously, if we then consider the profit target, so based on wave basis, if we turn around somewhere here, you can see that we're talking about, so if we turn around in the middle here, our profit target would be around 14,800. So while we have a 250 point window potentially to buy, based on the wave basis forecast, we would have around, what's that, 500 point or more window or range for our profit target. And if it actually would correct up till here, so we would have a 500 to 700 point profit target. So yeah, so I'm potentially on my secondary account. In the main account, we'll just leave things as it is. It means we'll put, if I'm right for the next week, we will have to bleed a little bit of what we gained. But once we get into that area again, we have to turn around and go further down. So there's no reason to try to now time the market. There's still the chance that wave 5 here hasn't finished, despite all the forecasts from wave basis telling us we're in the right area, because we saw that sometimes those forecasts are not capturing the full breadth. Yeah. So we obviously keep our positions open. If this turns out to be wrong and we go further down, we are happy. If it turns out to be right and we correct up into this area or up into that, up to this point roughly, we're also happy. We lose temporarily, but we know that then a week or two later, we again on the way down. And we know that wave 5 has to at least recover 70% of what wave 4 lost. But in this case, it will actually almost certainly build a new low for us here. So that wave 5 will take us below what we had here. And we're basically waiting, or I'm basically waiting with my second portfolio right now to, actually could take like this. If it takes like this, so then we would have a perfect channel for the wave pattern here, almost perfect channel. And then wave 5 would take us down to hit that channel here. Yeah, like now I cannot hit select wave 5 properly. Yeah, wrong key, no, right keyboard layout. Why does undo not work? Okay, move the channel again. I have the manual. Okay, now it fits again. Yeah, 1, 2. Yeah, so it basically would align very well if it goes like this, that at some point in time we will hit that channel in that range here, which also means it makes it less likely that the 61.8 retracement that would be up here will be the case, because for that we would have to break out from that channel. Now, it doesn't mean that that's not possible, it just means less likely, which means I will, in my secondary account, probably start shorting again once we hit the range that Wave Basis forecasts here, and have my take profit then somewhere down here, which would indicate, or which would mean, like, if I simulate that, so NASDAQ trade order, if we enter at, say, let's 4,242, so at the lowest of the range with $10,000, and the stop loss would then be at, our stop loss could actually be, or not buy, sell, obviously. Our stop loss could then be, theoretically, it would need to be up here at 0.2. So if we turn off the leverage for a second, and our stop loss would be at, what did we say here? 15,795.5, 50,795.5. So it would be a 3% risk with no leverage, and the reward here would be, if we take profit in the beginning of that box, although that box might move a little bit, so let's say at 14,900, and the reward would be 2 point. Okay, so here the risk reward ratio is not that great, because we have to consider the stop loss higher up, yeah, trading this pattern. However, where do we have the forecast for? That's purple, then this, and then we actually can add another. No, that's how that subdivides. That's how that subdivides. And for the orange one, oh no, so we have all the degrees here of the pattern, yeah. So while the risk reward ratio of this trade here isn't that great, because we have to consider wave 2 as our stop loss, because, or actually wave 1, sorry, my mistake, yeah. Completely forgot that, because we're obviously talking about an impulse. So we can actually ignore the 61.8 retracement, because this wave, so assuming that, yeah, like so many patterns on the chart. Okay, so we have the big wave 1, wave 2, and theoretically that might be wave 3 finished. And which means if this is an impulse, which in a corrective pattern, most of them start with an impulse pattern, so then we cannot go into the area of wave 4. So we cannot go, I'm just going to get a horizontal line here, we cannot enter the territory that we have here. Yeah, so our stop loss can actually be here, which would almost perfectly work out, because our point here is still slightly lower. So that's at 15,374.66, yeah. And if we can 15,374 66, sorry, 15,734, oh no, 15,374.66. And in this case, our risk is 2.7%. Our take profit is a little bit above 3%. So if we enter here, or actually if we enter here and sell here, however, if we enter a little bit later or enter in intervals and then also close in intervals, so use a trading stop loss, chances are that we actually end up with a higher profit. Yeah. And then if we then take it one level further, that's the one thing I like about Wave Basis, is exactly this, that I can now say, okay, what about then? After that, we would expect another, actually lock all smart tools, yeah. After that, that would then turn into another wave 1. We would expect another upwards movement, which then would take us higher, yeah. So we could be potentially shorted down here extra. Again, in our main portfolio, we'll just hold, because long-term the trend is downwards, and holding positions longer than a year, depending on if it's a CFD, a stock and whatnot, depending on the country you're in and so on, might have tax advantages for you, although it means that in between we suffer losses. But overall, at least until this point, we'll just hold, so even through that part here. And I personally, my other portfolio will from here downwards from that range downwards, short again in a separate position, probably with quite some leverage. So so if I but I will deal with that later. So for this week, it's the crucial part with the NDX. If either that profit target or profit area here proves to be correct, and which means we will see a free wave corrective pattern up there, or a combination of corrective patterns that takes us up there. And then after that, that's the area where it's going to get interesting again to short it down. Yeah. Now, unfortunately, we already went massively over time, so we don't have much time, but a quick glance at NVIDIA will still be possible. Because in NVIDIA, in my opinion, it looks like this. We have like from the all-time high at 480, wave 1, which is potentially a leading diagonal with 1, 2, 3, 4, 5. And now wave 2, which takes us here, which means we're now in wave 3 downwards. And wave 3 downwards might have already finished. So if we get a Fibonacci extension again, and adjust it to use our Elliott Wave extension template. Go back there. So if we look here, we can see that we went through the 138.2 profit target and pretty much almost touched the 161.8. We can also see if we look here, not super clear, but it looks like a 1, 2, 3, 4, 5. Yeah, so it looks like here, and maybe the auto labeling will even wrong shortcut. Maybe the auto labeling will even be able to label it. Yeah, it would actually go here. I personally think that wave 5 is here, and that might be a flat corrective pattern of some kind. So, and probably 1, 2 further down here. Either way, it looks like we have that first part down here already done to complete this as wave 3, which means in NVIDIA we would now expect also a rise a little bit. Again, we cannot enter the territory of 433, so there's not much room for that rise. Because if wave 4 goes there, we can see that we get first a warning, and then error, or rule violation. So we could only retrace up till here, which also means if that is the wave 4 point, so if we retrace somewhere in that area, we can actually throw retracement in there to again get a little bit extra information. And again, retracement, so if we retrace into that area, but again, we cannot reach up here, we could go into the 50% retracement for 31, but more likely probably the 38.2 retracement. So between 425 and 431 would be the area where I expect NVIDIA to recover. So it's less than 10% that it will move upwards. And then from there, we would have basically our fifth wave. And that fifth wave then, so blue was the retracement, that's the extension. And that fifth wave then would take us to potentially, there we can actually use a destination channel. Yeah, I mean, that fifth wave will probably take us onto, disappear. Let's just take a trend line. If we use Kennedy channeling technique again, would pretty much take us somewhere onto that line. Yeah, so depending on how long it drags out and so on, but probably what do we have here? So yeah, below the $400 mark. So if we're in the 425, 430 area, NVIDIA might be a good short as well, which I would then do also in my secondary portfolio, because obviously those are higher risk trades, to then potentially short it down to below 400. While it's only a 5% range here, if we combine it with some leverage, then obviously, especially because our stop loss would be super close. So we would have the stop loss at 433.87, and with in minimal range, so even trading with a higher leverage makes no big issue, because the capital at risk would be relatively little in that area here, whereas then the profits down to get below the 406 or below the 400 would be probably substantial in comparison. Anyway, that's it for today. I hope you were able to take something away from this. And yeah, like looking forward, not so much to this week, because again, I expect that the indexes, most of them might go up or should go up this week, because they appear to be like in the NDX at the end of a fifth wave, where again, this now turns into wave 3. And from here we go up again. Let's see whether we have that wave 3 point. So that actually should go here. Yep. And so we expect it to go up again into the area of 15,300, something like this, before we then have our wave 5 downwards that takes us to a new low. Yeah, so potentially somewhere like here. Yeah, so as I said, that's it for today. Thanks for tuning in, and then see you all next week. There's no stream because my wife and I are going on a short vacation. But then Monday in 2 weeks seems fair, or seems okay, because by then we might have seen this wave 4 play out and actually have the perfect moment to play or trade wave 5. So yeah, till then, guys, have a great day. Till next time. Bye.